Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing in trade, either on the back of research or on the back of technicals. And on the technicals, now we are joined by Vaishali Parekh, who's the Vice President of Technical Research, Prabhudas Lilladher, and of course from our research team, we are joined back by Jinay. Hi, good afternoon to you both. Let's get started. Let's resume with all the stocks that are in focus today. Vaishali, coming to you, you picked out Maruti Suzuki for us. Tell us, what are you penciling in on the charts for this counter?
Hi, very good afternoon. So I would say in the auto sector, we have seen the sector on the whole correcting quite a bit, and Maruti has really not participated. So I think the risk-reward ratio from here on is very favorable. So 10,300 would be the stop loss, and once the stock starts getting into momentum, I think first trading strategy would be around 12,000 levels.
All right, positive outlook coming in on Maruti Suzuki, but we'll keep with the auto pack. Then Hyundai is also in focus today because of the two brokerage notes that have come out. One by JP Morgan that has initiated an overweight with a target price of 2,200 rupees. Now, they have initiated this overweight on the back of the fact that they see Hyundai as a pure play on India's passenger car growth and premiumization journey, and expect the passenger vehicle sector to revive in the second half of FY26. Now, Hyundai's strong SUV mix is known for delivering better per unit profitability than the peers, while the capex efficiency improves return on capital employed, or the ROCE. Now, the firm expects potential market share tailwind in the second half of FY26, driven by new capacity and models with export contributions of 20%, providing a buffer against the local cyclicity. Also, the key triggers are the margin maintenance, the ROCE growth, and the market share increase. Also, we have Morgan Stanley that has initiated an overweight rating on Hyundai Motors with a target price of 2,418 rupees. They feel that the business expects a positive turn in demand and the model cycle in FY26 and 27, with new capacity additions, market recovery, and product actions that will drive the growth for Hyundai Motors. And on the back of that, Hyundai Motors is in focus today. It has given up the morning gains, nonetheless trading with gains of 1.3% right now. All right, moving on then, Jinnah, you have picked out Muthoot Capital for us. Again, an analyst meet that took place for the company. Tell us, what are the key takeaways for Muthoot Capital?
Muthoot Capital is in focus as the company had its analyst meet. If you look at the key takeaways, then the company has given a guidance for their OEM targets. The company is targeting about 3,000 crores of AUM in FY26. For FY26, they're targeting about 5,000 crores of AUM target, and over next 4 to 5 years, they're targeting about 10,000 worth of AUM target. So pretty big guidance coming in from the company, and a good target for the company. Now, they are also partnered with about 13 private banks for this and 6 public sector banks on this for achieving the targets. Also, they mentioned that the in-house collection in the southern market and the 75% ENACH, which stands for Electronic National Automated Clearing House penetration, lowered the cost of their collection, is what the company mentioned. And if you look at the stock currently, it's gaining about 0.9%.
All right, that's Muthoot Capital on the back of that analyst meet. But there's another counter that is in focus today, and the news that came in about CG Power, that's in focus. Now, the shares have soared already. It's soaring 3.2% right now after the company announced that its subsidiary CG Tronics secured a Kavach order from the Chittaranjan Locomotive Works, or CLW, in West Bengal, the government of India. CLW is an Indian Railways owned electric locomotive manufacturer, and the order value for the contract ranges between 500 crores to 600 crores, and the project is likely to be executed within a period of 1 year. On the back of this big order win, CG Power is soaring away in trade with gains of 3.2%. All right, Vaishali, coming to you then, CG Power is a name that you have picked out for us on the charts also. Tell us, what are you seeing on the charts for this one? I mean, in the last 1 month, it has given us some 6-odd% returns. Last 6 months, it has given 16-17-odd% returns. From here on, how do you see this counter moving? What are the levels that you're penciling in?
So yes, the long-term chart is very strong, and we saw a little bit of a retracement. So the stock did consolidate at around 700 levels. Today there is exceptionally high volume, and it's coming out of the range also. So once the stock sustains above 745, which it is currently right now, if we see a close also above that, I think the stock is ready to move higher towards 800 and so on. So I would say that it's worth considering the stock at these levels.
All right, CG Power on the charts. Coming to you, Jinay. Then Coal India is the name that you've picked out for us. In fact, Coal India was really gaining away in the trade today. It has given up those morning gains, but it's nonetheless trading with gains of almost 1.5%. Note, brokerage note that's powering the stock by Morgan Stanley. Tell us, what does the note say?
Initiation note on Coal India by Morgan Stanley. Now they have initiated with an overweight rating and the target price is 525. What they believe is that Coal India will be the key beneficiary of the power demand upcycle. Also, the strong power demand outlook bodes well for Coal India. And the overall coal volumes as well. They believe that the volumes should be the key earnings driver for the company over medium term, and the strong balance sheet will be supporting investment for the company going ahead as well. So positive initiation note and overweight rating by Morgan Stanley on Coal India with the target price of 525. Currently the stock is trading up about 1.5%.
All right, moving on to the sidelines of IGF Summit that's taking place. Anisha Jain caught up with Harsh Jain, who's the co-founder and CEO of Dream Sports, who emphasized India's potential for diverse sports growth and the need for leagues and fan-based commercialization, and how cricket serves as a playbook for other sports, while highlighting Dream Sports' role in the grassroots development and much more. Let's go cross and listen in.
Initially, it's all about, if you think about it as a startup, right? Startups take one thing to focus on and they do it really well. And then when they've nailed that, they can actually grow into the next things and expand. I think that's been a bit of the sports journey in India. We took hockey and we were really great. And then we took cricket and then we've become really great. World champions right now.
Of course.
And with yesterday's IPL auction, you can see it's amazing. I think now the time is coming where you can see the spark of greatness in many other fields. From a Neeraj Chopra to in javelin to boxing and
Kabaddi and whatnot.
Kabaddi and shooting and athletics as well, which I thought actually India's had taken massive leaps and bounds ahead. So I think all the work is happening. You will see the results in the next 10 years. So I'm hoping that by 2036, if we get a chance to host the Olympics in India, not even 2047, but 2036, I think you'll see a much more diverse, accomplished India at the Olympics.
Fingers crossed for that one, because as you said, the ingredients are in place and you yourself are playing a large role in that, at least in terms of creating more literacy around it. We've seen a lot from Dream Sports so far, but what more can we expect from you?
So what we've done is that we had Dream 11 and we had some success with that. And then we went into sports content with Fan Code and sports commerce with FC Shop. We went into sports engagement with Sixer. We have a AAA mobile cricket game with Dream Cricket. We have sports.
All right, and in a breaking now, Eknath Shinde, the former CM of Maharashtra, will be addressing the media at 3 p.m. Now, remember that the BJP-led Mahayuti has had a landslide victory in the Maharashtra elections, and there has been a confusion as to who's going to take over as the CM of Maharashtra. And now Eknath Shinde is likely to address the media at 3 p.m. to give more clarity on that. So we will be getting you all the details from that address, from the press conference today that's slated for 3 p.m. So do watch out for that. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. Let's get started then. Wipro is the name that was in focus today in the morning. In fact, it hit its highest levels in over 2 years after the company secured a $100 million deal from the Italian unit of Marelli, an automotive solution firm. The IT firm has extended partnership with the company for 4 years as well. As a part of the deal, Wipro Full Stride Cloud will migrate Marelli's Milan data center and server rooms to the cloud to centralize operations and provide more agile and stable ecosystem. That's what the word coming in from Wipro in the exchange filing. And Wipro's first entered into this partnership with Marelli in 2020. And on the back of this news flow, Wipro has currently given up for all those gains. It has succumbed to selling pressure. Currently, it is trading towards its day's lowest point with cuts of 0.6%. But keeping with the IT pack, Vaishali, you have picked out Infosys for us. Now, if you look at IT pack, the entire IT pack, we're seeing a recovery that is coming in on the IT pack, especially the bigger names. Tell us, what are you seeing on the charts for Infosys?
So I would say actually IT sector has been outperforming, and right now also on the whole, if you see, it's ready for a breakout. So talking about Infosys, that also is coming towards the previous high of 1960 levels. So I think we're ready for that target at least, and we can have a relook. Once it crosses that, we can see further upside. So it's getting into a trend. It becomes a buy at every decline with 1910 as a support.
All right, moving on. Jinai, you have picked up Zaggle for us. This stock is locked in the upper circuit even as we speak right now. Since morning, in fact, it has been locked in the upper circuit. Tell us, what's the news flow that's powering the stock?
Well, the company has announced in partnership, so Zaggle has actually entered with a referral partnership agreement with Mastercard Technology Private Limited, which is also known as Mastercard. Now, what under this partnership, Mastercard will be recommending a Zaggle SaaS platform, its payment and card products to its corporate customers and other ecosystem entities on a referral basis. So it will be beneficial, mutually beneficial for both the companies Zaggle and Mastercard. Now, this agreement is signed for a period of 7 years, and that is what it will be in focus for. And if you look at the stock price, it is locked in a 5% upper circuit.
All right, moving on from Zaggle to Indus Towers. Vaishali, you've picked out Indus Towers. The stock hasn't really done much, even in the last 6 months. Tell us, is it time for it to start moving? Even though year to date it has given some 72% returns, but last 6 months it hasn't done much. So from here on, where do you see this going?
So actually, the stock has shown good retracement, and right now it's showing from a bounce back from its oversold zone. So now, if I were to look at it from a positional strategy, also 320 would act as a good support. So this becomes a buy at every decline, but once the stock moves about 355, 360, it's ready to get into an upward movement of perhaps 400 levels.
All right, that's Indus Towers on the charts. Jinai, coming to you then. OMCs you have picked out. Of course, there was a note by Morgan Stanley in the morning about the OMCs. Tell us, what does the note say?
Well, definitely OMC stocks will be in focus. Morgan Stanley came up with a note where they said that the India's fuel prices are benchmarked to about $75 per barrel Brent. Also, the integrated margins for OMCs now have increased with the stable fuel prices. What they've also highlighted is that the rising crude discounts and the improving domestic demand will continue to support margins of OMC's companies, and this would reduce the narrative of fuel price cuts. Now, among the OMCs, their top two preference are HPCL and BPCL. So currently both the counters are trading under pressure, but definitely watch out.
All right. With that, we've come to an end of this edition of Market Fatafat. Jinai and Vaishali, thank you so much for taking the time out and joining us today. But we will move on to what's happening with LTIMindtree, which is very clear about its $10 billion target, which the company plans to achieve in the next 6 to 7 years. Now, in a special interaction that Aisha Faridi had with the CEO and MD, Debashish Chatterjee, and the whole-time director and COO, Nichiket Deshpande, here's a sneak peek of the chat.
We do want to become a $10 billion company over a period of time. Now, talking about $10 billion is not good enough. We know why, we know what, and the most important thing is how.
Yeah.
So we are right now in the middle of preparing the how, but we are very confident that we have a robust plan in terms of how do you get to the $10 billion over a period of time.
Great. Would you like to define?
Well, if you look
how many years or how many quarters is it going to take?
Well, I think, nobody really knew about the market conditions, what we experienced for the last 2 years. So it's probably difficult to define from those terms but assuming that the market conditions improve and assuming that we can do a 10% CAGR growth from next year onwards, it will be somewhere in the 2031, 2032. But having said that, we also have the appetite to do inorganic as well. So if you do an inorganic and the right one, then obviously the timeline can be crunched a little further.
Continue to grow in that large deal space. We have been invited to more large deals with that differentiation, and we are winning fair share of those. So that's one way AI will help us accelerate the journey to $10 billion that we are looking at.
The second component is, as I talked about this everything for AI, those are the new areas that the customers are spending money as they are getting ready for their AI journeys, whether it is infrastructure, whether it is data journeys, whether it is building guardrails and so on and so forth. So those are new revenue opportunities that we are trying to capture. That will give us new avenues of growth that we have not had.
The discipline is pretty much in place. So as an organization, we are always thriving for looking at those opportunities which will help us in terms of upliftment of margin. There are only, broadly, there are two levers that you have for margin, and there are sub-levers. The first and topmost lever for margin is growth. It is growth which can actually help in margin. And the second thing is there are certain cost levers which you can use, and it's the same set of levers which everybody uses. And we have been using those levers very effectively to help the margin stabilize, and margin can go up also if you use those levers properly. So the pressure on margin that you saw is basically the revenue line did not come the way we had expected. But the moment we realized that it is not coming up to our expectation, we actually ensured that all the other levers that we had, we did not, we had implemented those levers very well. And actually you saw a little bit of upliftment in margin in the last 2 quarters. And our view is that come what may, if you can run the margin program in a very disciplined fashion, then as the revenues come back, margin also will see a significant upliftment with the revenue line.
And well, before we wrap up this edition of Market Fatafat, let's go across and take a look at what Nilesh Shah, who's the MD of Kotak AMC, had to say about the consumption pack, as he says that good festive season sale is fueling the sector and is bullish on the premiumization as a theme than the mass market. Let's go across and listen into what he had to say.
Festival season, it has begun reasonably good. Apparel sales were in double digit. The festival season passenger vehicle and two-wheeler sales were either in high single digit or low double digit. In two-wheelers, post-festival demand is better than during festival period. So my feeling is that festival season has given a boost to the consumption. Now we are witnessing wedding season, about 48 to 50 lakh weddings, spending of about 5.5 lakh crore to 6 lakh crore. That should also support economy and consumption. Second half will be better than first half in terms of growth, thanks to festival season pickup, wedding, and government capex if it reaches budgeted target. Put all these things together, you can pick up in consumption as well as in investment some of the bets. In consumption, we are more bullish consumer staples than consumer durables. We are more bullish rural India rather than urban India. And we are still bullish on premiumization rather than mass market. On the capex side, the focus of the government is on road, water, defense. I think here you'll have to be very, very selective in picking up counters, because there are some counters where floating stock is limited and hence valuations are ahead of fundamentals. Those businesses will do well, but the investors' expectation at this point of time is so high that it might be difficult to meet.
If you like this video, then like, share and subscribe to ET Now.